The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Monday edition of the Tiger Technicians Hour. 877-927-6648 is the number to call. And it is August the 13th. So how about that? Halfway through August. Time is flying. So thank you to Steve for kicking us off this morning here at TFNN. Great show as always. And then he's joined by Tom O'Brien. Together they are a fabulous team. And I'm reminded of Click and Clack. Here we started off here in Boston, the auto guys. And good sense of humor, great information, and fun. So I come in here at 11 o'clock till noon, and then we get Larry Pasavento, noon till 1 Eastern Time. And we just have a slew of activity right through till 6 o'clock this evening. Most importantly for me, we're looking at a market that says, under the auspices of nervous Nellies, you've had a series of higher highs and higher lows. One of the factors that I always talk about, and I spend a great deal of time, and with my subscribers, they know that I make a big deal of this. It's gets a great deal of emphasis, is the action of the three bears, that is Bondi, VIXI, and Dolly. That's bonds, the dollar, and the volatility index. If they are subsiding, if they are coming down, that allows money to flow a little easier into stocks. If they are pulling back, if they're pulling back, the money can go. If they start to rally, the market becomes somewhat vulnerable. Now, it doesn't work all the time. It works most of the time. That's number one. Number two is, I've been talking about the volatility index being in the teens, especially that 16-15 area, as allowing money. It's what I call buying pressure. Then what I spoke about on Friday was, I'm beginning to see something that's a little different, and that I might have to start changing the numbers. I had said in the 20s, the market itself becomes highly vulnerable. I'm getting to see some signs that I've got to modify those numbers, at least on the shorter term. So they're not modified yet. So my subscribers will be waiting to see what the numbers are. But here's something even more important as far as I'm concerned. I needed to see the cues in the ChapmanWave, and on Wednesday, for those subscribers who, for those people who have signed up for Tiger Dollars and have been going to the webinar series that we have here between all the hosts. I'll be doing mine on Wednesday evening, and I'm going to be discussing some of these techniques. I'll talk about it right now. Right now I'm using a black chart, black background. On Wednesday night I'll do quite a lot with the white background so that people can do with it what they wish. Most importantly, the technique that I like to talk about is a technique where you identify the lowest low bar and you merely count each successively higher peak. And when you get to the fourth highest peak, I label them capital A, B, C, D, E, etc. on the way up, lowercase a, B, C, D, so you immediately identify a move to the downside. So we've had capital A, B, C, and the C stopped at 66.92 on the Qs. I was asked about the Qs in an email. I'll get to that first just in case I run out of time. Well, I wanted to see 66.93 or higher in the Qs to at least set up leg D. What did it do today? We went to 66.97. That's leg D. But wait a minute. I'll be showing you on that webinar that it isn't just the simplification of letters that makes us an adventure. It is how you use many of the technical aspects. Now, one of those technical aspects is how is the MACD, how is the stochastic, what are they doing? Well, the MACD has expanded huge. That is the moving average convergence divergence. If you're looking at Tiger TV, it's always the chart on the left, chart in the middle is the weekly, chart on the right is the monthly. But look at the daily of the QQQ Power Shares Trust Series. The MACD is very strong. Stochastic is at 95.98. What does that say? It says that as long as these two technical indicators are rallying or holding very well, that too denotes buying pressure. Where would they fail? If the Qs start to break down and go underneath 66, close under 66, the 9-period moving average support, trading now at 66.52, down 34, down 0.51%. If that starts to break down, we will then see the Qs falter. But the Qs would need to go underneath 80% to really set in place a sell mode in the Qs. Okay, so that says be a little careful here. Short term, you can easily get a pullback. Peak D is if there's no new high bar tomorrow. In other words, if tomorrow the high, the full high of the bar only goes to 66.96. That will make a peak. If, in fact, there's an inside bar tomorrow, that just says be careful. You've got a high-level consolidation. Okay. That's the daily. The monthly chart is a little different. Why? Because it has already made a serious peak, a peak E, on the week of the 6th of April at 68.55, made a doji top, pulled back to the 60.04 level on the 8th of the 6th, on the 8th of week of the 8th of June, and has now gone very quickly to peak ABCD, but underneath the 68.55 level. So now we look at those same two indicators. We say, hey, wait a minute. The MACD's just barely crossed positive. Stochastic is still now at 76%, under 80%. Got to be careful. Then there's another rule. The rule that I use in the ChapmanWave methodology, based on in my CD, Introducing the ChapmanWave Methodology, this is one of the techniques I talk about. The quicker you go from an identifiable low bar, trough, to peak A, B, C, and then leg D, the quicker you've got to expect that there's going to be a pullback, but that particular technique doesn't say that it's a major pullback. It just says a pullback. And where would the major support be? 65.12 is the 9-period moving average support, and the up channel breaks if 63.22 is broken in the next month. All right? Here we go. There's another pattern that you can look at, and it looks very much like here. Many of the hosts here in TFNN use a technique that they call A to B equals C to D. Hey, wait a minute. Although it went to remember, my technique uses the wording peak A, peak B, or leg A, leg B, leg C, etc. It can go all the way to a G. Trough A, trough B. But this particular technique says there's an A to B equals C to D. It's just like a lightning bolt. It is a measured move, and that measured move clearly states that the point of reference will be the high bar to the most recent low bar to the rally retracement, and then the failure should take it. In my case, I'd be looking for what I call the dreaded H, a retest of the low of 60.04, if that was the technique. But if it smashes through there, there's a one-to-one relationship, and that could take you all the way down to the 53 or even the 52 level in the 200-period moving average. So that's what I put into the pie, and I say, what's the chance for that? There's always a chance for it, but I don't see it just yet. Why? Look at the monthly chart. So the sandwich of the daily and the monthly with the weekly in the middle invariably says that if the daily has had quite a sharp pullback, it's going to impact the weekly, and then the weekly is going to take quite a while to repair that damage. Now what we're looking at is the Qs, Power Shares, monthly chart. Has made two buy modes. The previous one stopped at a peak F top. That's the sixth highest peak of the week in July of 2011 and 59.83. Pulled back to 49.93. Ran up to an alternate wave count G or B at 68.55 with a doji candle. That was in April of this year, pulled back to the 9-period exponential moving average and is now walking that 9-period moving average. It has not broken down. So I need to put the pie together. I need to say, okay, what are we going to go, or the puzzle? Have we got all these parts of the puzzle? Where are we? Monthly chart remains very positive. Within the up channel, within the 9-period exponential moving average, I could do this. I don't like to have it as a messy chart here, but I'm going to just include this for now, and I'm going to change the color. I'll make this gray. Make it gray. And we're right bumping into the mid-channel line of this up channel, this long-term up channel from back in November of 2008 at 2505. So far, there's nothing wrong. It's just looking fantastic. The weekly chart's the one that is a problem because it could make a U-turn here and come back, and it depends on how deep it comes back. And then we could have a serious problem as it retests the 60 level or breaks under it. So I wanted to go through that. Now let's look at the upside. If perchance by the end of the day today, the Dow is down 86 at 13,121, the S&P is down 7.5 at 1398, the composite index is down 7. Let me make that a little bit bigger. The composite index is down 19 at 3,001. Gold is down almost 4 points at 16.19. Silver's down 24 cents at 27.9. We've got high-grade copper down 4. Wow, down at 3.34. Not good. Crude oil is down 92 at 92.27, and bonds are up 10/30 seconds. So now what I'm looking at is the part of the puzzle that says we could in fact go higher. Very clearly states that if by the end of the day the Dow is down only, say, 42 points and the S&P is down 3.70, and tomorrow sees an up session, that would be very positive. If today we close at the low of the day, I'm going to explain the other circumstances, close at the low of the day, then we've got to look at something that's really pertinent to everything that I do. And now if we're looking at that, if we're looking at that, we have to use the ChapmanWave. At least I have to use the ChapmanWave and say, wait a minute. This in the ChapmanWave is a peak D that was made at 13,338. 338 back on, where did it go? Back in May the 1st of this year. Pulls down to 12,035, has had a beautiful peak ABCD to 12,961, pulled back to the 200-period exponential moving average support, and has now gone to higher highs and has gone to another peak D at 13,215.97, pulls back, and on Friday did not take that out. It went to 13,208. The diamonds did make a leg E up. So it's all of this is saying on a short-term basis, when you get to, in the ChapmanWave, when you get to a peak D or E, that's when the song goes. I was singing the song on Friday. The wave goes to A and then to B. There it is, A to B. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. So we'll talk about the Dow and the S&P. We'll talk about bonds. We'll come back, talk about the dollar, the euro, straight off this break. And I still want to take your calls at 877-927-6648. You can call right away. I'm ready, because I will include all these other aspects as we move along through the show. They are all important in my work.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direxion Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirexionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion Shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, folks, this is the beginning of the week. You know, I'm going to go through all the numbers as I see them. Let's just do that. We've got, did the Qs, okay, the S&P. No, I haven't done have I done the Dow? Yes, I did the Dow, but I'll do it again. And the Dow in this particular instance has a C1, C2 double top in the 120-minute chart, and that's like a peak D. And the stochastic says, yep, it's pulling back. It's 60%. MACD's turning down, so there could still be a little bit of room to the downside. Most importantly, how 13,105 is handled by the Dow. If it pulls back further, that's the 9-period exponential moving average. That's going to be key on the short term. And I can see that there could be a slide today, maybe into tomorrow, since there's a peak D here, a leg E, possibly peak E in the Qs. But my impression, and I want to go through this now, is that the volatility index is still giving me a lot of information. Now, when I look at the, so that's the Q, when I look at the S&P, the SPX, and I'm just going to show this for a moment. This is what my subscribers get every single day in my opening call. Very detailed analysis. And, of course, we've got our stock picks, and I show the charts and all different time frames of what we're looking at. When you look at the up channels in the Dow, you'll see that the Dow's been making higher highs, but it's broken away from that inside track sell zone in the daily chart, which was going up when it went to the 13,215 level. It should have gone quite a bit further to at least get close to that red line over there. And that says to me, starting to lose upside momentum, But that's not to say that it's a failure pattern. It's just saying, hey, this is where you got to be careful, because the S&P, which is 500 stocks, has shown that it has much. I'm waving my arms here. Nobody can see. Oh, the 500 stocks in the S&P are doing quite a bit better because they are getting closer to that red line, what I call the inside track sell or repellent zone. Right? So now, what I'm also looking at on this particular chart is that the volatility index this morning went to 14.07. From 14.07, I would expect that there has to be some kind of a bounce in the volatility index here, at least to try to test the 1580 to 1630 area. But it just sliced from 1925. It just went right through this whole area of 17.75 to 16.75. It just went right through it, gapped down, and it hasn't looked back. That says to me two things are going on. One is that very quietly there is buying pressure. That's number one. Number two, that I probably have to look at the volatility index number now in a slightly different way. But I really also have to wait to see for Friday, where it closes on Friday, where it holds the whole week, and what it does on Friday. That's number one. Number two is, in the context of the different indexes, there's been so much skepticism and outright bearishness, and you've got this cliff, this financial cliff. When the media starts talking about day in, day out financial cliff, to me, that just says, great support, guys. Just keep it up, because that's support. You don't go over the cliff when the financial media is actually talking about it. You do it afterwards. When they're looking up at the sky, you drop down. When they're looking down, you want to move up. And that tells me that there is buying pressure. I'm going to go to our first call in a moment. Our four horsemen in the Dow, GE, made a peak E with a doji top at 21.19. It's pulling back, but so far it's very orderly. But the weekly chart, I have to call it leg B up, possibly peak B. I mean, I can't believe that's a brand new buy move. That says there's a good chance that GE could go higher. It'll break down if GE breaks under 19 again. It's at 20.92. IBM, another one of my Dow quartet index stocks, it did very well. Went to a peak D, pulled back, holding the 9-period moving average. MACD's at 84%. The MACD's good. Stochastic's 84%. The weekly chart is the one that has me a little concerned, because that could become that A to B equals C to D. That could become a downside target. I don't want to even talk about that yet. What I do want to say is, in the monthly chart of IBM, it is walking and holding the 9-period exponential moving average, even though the technicals have pulled back quite sharply. So I need to say, okay, this is very selective. I've called this a very selective move to the upside. In the opening call, we are mostly on the short side. We do have a long on the upside. How's that doing? If I can even find it. Yep, still doing okay, still making money on that. Pulling back today, but we're up. And that's the way I want to look at this market. We just added another long this morning. Hopefully that one will work out. Now, what I'm going to do is I'm going to come right back and we'll go to our first caller, and then I've got some questions in the den. I'll get to all of that when we get back. Basil Chapman, Dow's down 72, S&P's down 6. I'll be back with Joe in Boston straight after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. I was just in the moment talking about my Dow Quartet, my little index that I made up of GE, IBM, MMM, Mutex. This has been going on for decades or so. And sometimes I add guest artists like a DuPont or a Caterpillar. But just keeping to the quartet now for about 2 months. I waited until MMM went to leg D, and that's today, just like the Qs. It went to leg D, but the MACD and stochastic are still strong. And UTX, which is my pilot white one, has gone to a potential leg D. It might be C, it might be got an alternate wave count. So far, they're all acting well with the stochastic and MACD. So if this is going to be a pullback, it says it's going to be a pullback, and I'll talk about it in relation to the good stocks and the bad stocks right now because we're going to Joe in Boston. Hi, Joe. How are you?
Good, Basil. How are you?
Talking about the good stocks and the bad stocks, you want to look at Google,
yes.
And Google is one of the strongest stocks. It's made a new recovery high, but not an all-time high. It's at 652.46, so that is 18 points away from an all-time high. And no, not an all-time high. Right? You always have to pull the chart back, and you pull it back 747. Like a Boeing coming into land at 7:47 in November of 2007. It went to land right on the 200-period exponential moving average at 247.30 in 2008, and then it started to rally again. You are doing what?
Nothing yet. I was thinking of getting long.
You know, it's interesting that you say that when I saw your name and I saw Google and I looked at the chart, I know the callers who are looking to go short and ones who are either can go short or go long, and I had a feeling that you're looking at the sustained strength. Am I correct?
Yeah, well, I look at stuff as it approaches highs. That's strength.
Right. Oh, let me talk to that issue. Very often in the media, you hear people talking about getting all nervous about stocks at new highs, stocks at new highs. Stocks at new highs tend to go where? To
higher.
Newer highs. Stocks at new lows tend to go where? At lower lows. That's the history. That's how new high records are made, because you couldn't get stocks going to new highs and then backing away every time. Yeah. They're the leaders. In this case, it's amazing that a stock at 652, when I look at this very often, I see a lot of shares. I'm going to do that right now. GOOG. I see a lot of shares at 100. In fact, all the way down the list for the past, let's see, I'll pull it back down to 11:30. They've almost all been $100 shares. So it tells me that the institutions come in. They can also do their block trades, which show up at the end of the day, but they can also do it many other ways. But I don't see any block trades here, and that's very interesting. So this is what I'm thinking. I'm in an alternate count right now with Google. It's either in F or B. F says, whoa, be careful. F says, B says, great, you've still got C and D to go. Right. So then I said to myself, okay, when I'm looking at a stock and it's in a position where you can say, I'm going to go short, no, I'm going to go long, no, I'm going to go short, look at the evidence. And the weight of evidence says that the MACD is making that pattern that I call a potential M pattern. It looks a little bit like a dolphin. And what's happening is that that difference in the yellow line between the red line is actually expanding right now again. So that could make an arch formation as Google goes higher. And that's a positive. The stochastics at 86%, that's and holding for a long period, because other times when Google has just popped over the 80% level, it can very quickly turn down. So far, this is the longest it's held. So to me, that says what I've been talking about in this bifurcated market is that there are stocks that you must not be afraid to go long, and there are stocks that don't think about going long. The trend, the tide has changed in the monthly. A hat trick top, meaning the tide is turning down. To my eye, both in the daily and the monthly, all signs are saying it wants to at least retest the candle of March of this year, which had a high of 658.59, so it's about 6 points higher. If it does that, that's really positive. Why? Because in the weekly is making a decisive W formation in that pattern that I call a rectangle, where it makes the flag, has a rally attempt, goes to the top, then comes back and retests the bottom. Now it's on its way back, but there's another pattern that I love to look at, and that's what I call the ChapmanWave squash. What is the squash? The reason why I decided years ago, I'm talking 25 years ago or something, to put the stochastic below the MACD is just for this one particular pattern. When there's a very sharp move going from what normally in the books are called oversold, I call it in the sell zone, underneath 20%, or the cal zone, some people like to call it, if they're hungry, to the buy zone, which is up in the 80% or higher level, the sustained buying pressure area, and the MACD turns up, it creates a very quick, how can I call it? It looks like a positive divergence between the stochastic running sharply and the MACD only now turning up. And that says there should be room to go on the upside. So now, what would your situation be? Would you start a position now, and that would be the only position, or would you actually have maybe two positions, or would you use options, or are you going to make it a stock?
What I'd do is I'd sell an out-of-the-money put spread for a credit, and then basically if it goes sideways or higher, you win. So I probably try to set it up where you get a 66% chance that you're going to make money. So even if it goes sideways, that's how I play it.
I tell you why I asked you the question. Yeah. It's because it's a situation where I would prefer the weight of your position to be on a pullback rather than going to the upside.
Right.
If you're able just to start a position right now at 652, I've got on the I've got on the 120 minute. This is leg C. It's approaching resistance. I'm not sure if it's going to be able to go much higher than to maybe 656 before having a little bit more of a consolidation. This is my preference. I'm with you. My bias right now, unless the Dow closes in the next 2 days decisively below 12,950, and that'll take the S&P to, so it's about 950. So the S&P would be at the 1368 level, 1372.
Basil, let me just throw some in here. I read an article over the weekend.
Yep.
And it was talking about how they were talking about how the CNBC ratings are at like almost an all-time, at like 10-year lows, and how that could be good for the bulls because people just aren't interested in the market.
It's an interesting that you say that, because when I was at tennis the other day, for the very first time in 3 years, a group of guys together suddenly started talking about the market. But what were they talking about? They were talking about the volatility, that today it's up, tomorrow it's down. No one was saying, I just bought this and I just bought that. There's one real smart guy. He's 76 years old, and he's been in the markets he's not afraid of anything. He's the only guy that's been buying and selling throughout the last 2-3 years. So I'm with you. I can see just a total debilitation. People just feel they are really nervous about what's been said about the markets. Nobody said that the Dow is now, 10% from its all-time high?
I know.
So, and I don't want to get into the camp. Now, my positions in my opening call are mostly short, but I'm trying my very best, and so far, thank goodness that it's working out, is to find the stocks that are absolutely showing the weakest technicals. But that's not to say I'm not looking for the stocks. Now, my preference has been to find much lower price stocks, because I think when you're looking for stocks that have all the prerequisites, your percentage gains are much better for the same amount of work. It's like a guy who sells Chevrolets and the other guy sells Cadillacs. You know what I'm saying? The same process, same everything, you may as well sell the Cadillac. So in this particular instance, I like the Google trade. And I think that Google, from the chart pattern, this chart pattern to me has a very familiar look. A dreaded H that turns out to be successful invariably tries to get back to the previous high. In this case, it'll be 670. So my recommendation is start your position now, but wait for that sudden one-day pullback, and that's when you can think about the better part of a position. And where would it be? It would be I would use the gap that it just had. It's 642. If you can get anywhere in the 646 to 642 level, and you're looking at time, you wouldn't go to August. You're going out to September or something?
Yeah, no, I'd even go to August, because the premium evaporates very quickly in the last week.
And we've still got the next week to go. Yeah. Okay. Well, if that's the case, then I would stick with my recommendation. A little bit now, wait for a pullback, and get it, and then the rest, I think, is up to Google.
Because if this market turns around, I mean, this thing could close at 658 today.
If the market turns around to the upside,
this thing could close at 658.
There are a couple of aspects that I'm looking at, and one is I was going to talk about straight after you came on. The TLT is at, and if you put it together, look at this. The TLT is rallying, but it hasn't yet broken above the gap down from the other day on the 8th, where the high was 126.39. My weekly chart is saying it's just a timeout, folks. Bonds are taking a timeout here. I don't yet really have a sell signal, so I have to call it a timeout. And look at the dollar. The dollar DXY is it just can't get out of its own way at this particular point, and that's made a peak D in the weekly. It looks a little bit like a timeout that I'm looking at in the bonds and the TLT. And if you look at the EUR USD, that's having a rally, and it says to me, at least besides what we're hearing, and of course there could also be the political news over the weekend, it just says to me that I think you're right. I think that this is very selective on the upside. The stocks that have done the best seem to continue to do well, and I like your stance. And I wanted to make a big effort to talk about this on the show as you came on, because
did you do any work on Michael Kors over the weekend? KORS.
You know, I ran out of time. Actually, was with the grandkids over the weekend. I ran out of time. It was on my list. I never got to see it, but Michael Kors.
Earnings tomorrow morning.
Earnings are tomorrow morning. Now, the fact that it's pulling back says that, this is very, very difficult to assess for the reason that it's an IPO. So this is the first monthly chart to peak A. This is the first consolidation that it's had, holding within a trading range. I'm going to give you parameters that I would look for. If Michael Kors closes, I don't care what it does in the first, whatever, when the news is out. Tomorrow, you say, in the evening?
Yeah, tomorrow before the open, yeah.
Oh, before the opening? Well, by 9:35 in the morning, or I don't know if they have a conference call, by mid-morning, if KORS is in fact above 45.20, that'll be a little bit like the earnings on some of the apparel, definitely not all, but some of the apparel companies. This speaks to the other thing. The malls are completely full. I had to book a hotel in Manhattan. We're talking $400, $500, or $300 to $500. What recession are we talking about?
I don't know, Basil. Everybody's so negative.
I mean, I understand the job situation is horrible, but the malls are full. You can't get accommodation anywhere. Cruise lines never even suffered from the what was that in Greece off the island from that terrible accident. I don't understand it. There's a dichotomy between reality. That has to include the job reality, which in many ways aren't there. But I think that they're under-table jobs. I think that they're jobs in new areas. I don't think they're being counted the way they were counted before. Therefore, I don't think they're being counted correctly. But absolutely, for people who have it's just a horrible. And anyone middle-aged who's looking for a job, that is really tough.
Right.
But I'm looking at the markets, I'm looking at the charts, and I'm saying something's wrong with this picture. Well, so let's see what happens with Kors. If it cracks and it breaks above 45.20 and holds it to the close tomorrow, it'll retest the 50.69 area. If it completely fails, it's going to retest the 37.77, and it's at 41.49. Right, okay. That's all I can say. Thank you for calling. Thanks, I appreciate it, Joe. Thank you. Okay, folks, let's just go to that. I had a question in the den. Here's another thing: high-grade copper. You see, when I put the puzzle together. Internationally, I have to say that if high-grade copper, let me go to the continuous contract chart, is saying there is economic weakness out there. The FXI, that's China. Well, this isn't the most major Chinese market, but the FXI index, if you look at the high-grade copper, and a lot of it came before from buying in China, well, the copper chart says, geez, be real careful. It closed below 3.29, the low of, this is the continuous contract, the low of the 8th of June. Wow, you could slide all the way back to test the 3 level again. Wait a minute. FXI, which is the Shenhua, they changed the name. iShares FTSE China 25, has got pretty much the same chart as copper, but is actually holding kind of okay right now. But it is a horrible chart when you look at the monthly, because the monthly once was at 72.26 and right now it's at 34.88. So definitely China's had a slowdown. Now, do I have time to do this? Yeah, I wanted to talk about, just for a moment, about the American automobile as I read it. Oh, there goes the music. All I wanted to say is this. I believe that any politician right now should go straight to the heart of the issue and talk about buying American, because the American automobile car companies are finally getting their act together and doing a much, much, much better job. Hey, I'll be back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. Okay, request in the den. Here we go. And folks, you know, den, which is a fabulous meeting. We've got all these folks in the den, and they give advice. I make a mistake, and they say, no, the earnings come out. Whatever it is, they correct them. It's just fabulous, and they come up with great ideas. So we're looking at the Dow Jones 76, and that's in the context of a pretty decent move that it's had so far. But let's go to the EEM. And the request was, could I look at the iShares Emerging Market Index? Well, the iShares had a spectacular move. Now, first of all, let me just do this, because if you're looking at my charts, you'll see how many peak Ds there are. Yes, it can go high even to an E, but that's the technique. So the EEM made a peak D top back at 55.83 back in October of 2007, plummeted down to this 18.22 area, a 67% decline. That was in November of 2008, and then went peak A, B, C, that's the stalk leg formation. Remember ChapmanWave stalk leg? D, and went to a peak E, and on left side, right side, price time miss. So it almost got there in time and almost got there in price, but it didn't get there because it got to 50.43 instead of the previous high of 52.49. That was the measured move, and then it pulled back, and that's the beacon. It pulls back to where? It pulls back to 43.22. Now it's gone to peak A, but it's given back a lot of that, and the 9-period moving average is now resistance, but the stochastic is giving a positive divergence, and the MACD is giving a potential W formation. So the price has to now dictate what's going to go next. And I'll make it clear. If the EEM on Friday afternoon somehow manages, it's at 40.22. If it somehow manages to close above 40.78, I'd prefer 41.35. That's going to be very good action. If it gets back into the candle of last month and it closes under 30, it's at 40.22, under 38.70, that's going to be negative. That's how simple this one's going to be in the monthly, because it's going to change the technicals. The daily has gone to a peak D with the 200-period moving average acting as a magnet, now a repellent line, and it should hang around this area for a couple of days as it digests the gains. It's the weekly that's the big issue. Will the weekly on the EEM be able to tackle that very strong, oh, it did, declining line? Well, it did. It closed above it last week. So let's see. It's the same parameters, in fact, for the weekly chart. It needs very quickly to get to the 41.80 to the 42.30 area so that the stochastic and the MACD can improve. So it's improving, and it's gotten to a peak D in the daily. This is the moment of hesitation. We're going to have to watch this really closely. So let me go through this again. INDU. Oh, did I do the euro? No. So EUR-USD was a quick question about the euro. Yes, the euro is rallying, but it's got a long way to go to get to leg D above a 1.244, and that's the high of the 6. If it's able to do that, that's really going to help the market. Oh, it didn't do gold at all. GLD, as I'm signing off here, I know we're going to run out of time. GLD, you know, I talk about these moving averages. You can ignore them, but I'm telling you, if you just add them to your techniques, it's just another bit of information that's look at the way the resistance at the 200-period exponential moving average has been for the GLD. And remember, I'm not interested in buying the GLD. I think that the other thing, I think the GLD is in a trading range with monthly making lower highs and lower lows. That's the stance I've had so far, which in the end will turn out to be more positive for the dollar, but not just yet. So here's this range. If the GLD actually breaks above it's at 156.82. If it breaks above 158.30, then all of a sudden the candle of the 6th of June at 159.20 will become a target, but the stochastic's not yet working its magic. It's only at 79%. MACD is positive. So I'm looking at that. I'm saying that's not the place to be. And let's just go back to if the volatility index starts to climb and gets to 15.80 or 16.30, this market comes down quite a bit more. But in the meantime, it's holding well. It's doing good. And as far as I'm concerned, 12,950. Close below that next 2 days, negative. A close above 13,235 to 13,250, positive. Stay tuned for Larry Presidente. My service is the opening call. I'll be back.